and its moves that are making you determine why you're taking what you're taking. And that needs to be avoided at all costs, especially as a beginner. It's good to get your feet wet. It's good to get some hands-on experience, but at the same time, you cannot be trading for the sake of trading. You need to trade and execute accordingly. So right off the start, my pivot plus 200 EMA is not acting as I wanted to. And again, what made me not want to trigger an idea above here, here, and here? Well, first and foremost, it's not doing what I needed to do. It just keeps chopping indecisively over and under the pivot 200 EMA. I don't have my pivot and 200 EMA perfectly aligned, which provides me with more proof that this is going to be the max conviction area, right? So again, until I could see price want to consistently reclaim my 200 EMA and my pivot, more importantly, I cannot execute an idea here. I don't even have an invalidation. How would I determine an invalidation? Well, first and foremost, you could look at something like this as a potential sweep area or a potential low that could be considered defended, but it's not enough for me to go based off just the trade alone. So realistically, when I'm looking, and of course this might come towards the end of the day, right? But this can change very, very quickly. What I'm looking for is a proper sweep, a proper flush, and a lot of things come into effect here. My volume oscillator, I want to see this into the negatives. I want to see that, bears or sellers have overplayed their hand on a level that I consider to be the mean/bias of the day, right? If we're absorbing all the sell pressure on a level that I consider to be very, very significant, then a reclaiming of this, fits my idea that, maybe R1, R2, R3 are potential targets for today. So I have a number of things I look at in order to trigger a trade. And it's not just because, price closes above this thing, so that means, my system is valid and my setup is valid. No, absolutely not. Things need to align. And if they only align 2 out of the 3 or 3 out of the 4, then I'm trying my best to negotiate with a market that's not giving me exactly what I need. So again, it's a high discipline approach. If I'm not getting exactly what I need, the trade is not being taken. Okay? Does everybody understand the significance and importance of what I just emphasized? Like, does everybody understand why I'm putting such a huge emphasis on this? Just before we move forward. Beautiful. Beautiful. So now we move on to the next thing, right? So now we have a reason, and I'm giving you one example today. There's going to be multiple streams regarding this, and they're going to get more intensive, more complicated as things go along. But today is about understanding the raw fundamentals of what a trader is, why they take what they take, and how they unapologetically stick to their rules. Because if you have no rules, you stand for nothing. Okay? Perfect. Perfect. So now that that's been covered, the emphasis on if I don't see it, I can't take it. What comes next? Now it's planning ahead, right? Now it's planning in hypotheticals. If my trade were to execute, if I were to get every trigger I wanted, what's the next course of action? Determining what I'm comfortable walking away with and what I'm targeting to consider it a successful trade, a successful risk. Naturally, if my stop, okay, and I'm speaking in hypotheticals here, again, not the strategy won't apply to everybody, so I don't feel the need to go over it like in that sense, but I'm going to give you hypotheticals here, okay? If I consider an invalidation to be 68,200, right? Which is a fairly, tight stop. It's very, very tight risk, but at the same time, these pivotal levels are nothing too dramatic. We're looking at 2 to 3% moves a day. In order for me, right, to consider this trade worth my while, the risk to reward needs to make absolute sense to me. In other terms, I'm not willing to risk a 50-50 outcome. And what do I mean by this? I'm not willing to sit 2%, 3% underwater for a trade that's only looking to target me 2 to 3%. Naturally, that makes no sense. A coin flip, really? Is this what we base our odds on? Absolutely not. Absolutely not. The favor needs to be something like a 3-to-1, a 2-to-1. It needs to make sense. It needs to make sense. There needs to be a plausible cause. Is that the right thing to say? There needs to be a probable cause, right? For assuming that the risk is worth it here, right? And now a lot of people will stick to risk to reward, but sometimes that doesn't provide the context, into why a trade might be more, more likely to succeed than not. It's good to have a high risk to reward. I understand that, but at the same time, if your setup is not there and the likeliness or the hit rate that you're targeting is not there, then the risk also sometimes does not make sense. But what is most important, most important is that by in any case, for any system, you should not have an equal amount of loss to an equal amount of profit. It's just not good practice. It's not good practice. A lot of the traders that you'll see that have tight-knit systems have a max 35, maybe 45% win rate. It's extremely rare to see anything above this, right? It's almost unrealistic, it's unsustainable, and over enough course of trades, that win rate will drop. So again, knowing what you know right now and what I just told you, over the course of years and years and years and years, trades will be lost, and it's only part of it, it's part of the game. And naturally, your aggregate of win percentage will eventually go down. Does it make sense to risk the same amount of money for the same amount of reward? Does it make sense to you? Naturally, no, right? If your win rate goes down over a long enough series of time, it does not make sense to always risk an equal amount in terms of potential gain. There needs to be a substantial reason for why you're going into this trade. There needs, and I relate it a lot to a poker game, right? Everybody can just call and continue to raise the chips and continue to bluff their way through, right? But at the same time, nobody, and I mean nobody, that is a sophisticated player will ever go in with low odds. They might get away with it once or twice, but at the same time, if there's no real value to taking the idea, then it just puts them in a position where they lose complete and total control. And the thing about trading is it needs to be compounded wins. It needs to be consistent. And if your system is always based on risking equal loss for equal reward, you're going to have a hard time trying to find a curve that goes to the top right, especially when it comes to your P&L. So naturally, not every trade is going to be available to you every day, and you're just going to have to accept that. Think of it not as a day-to-day basis. And I see a lot of people, they'll do this. I want to make 2% a day. Okay, that's great. 2% a day is roughly around 60% a month. Do you know how incredibly hard it is to extract perfectly from a market every single day? There will be days where you have a 6% gain. There will be days where you have a 2% loss. There will be days where you have a 3% gain. There will be days where you have a 1% loss. There will be days where you have a 0% gain. There will be 3 days where you have a 0% gain. So what's the important thing to take away from this is you need to look at your trading as an overall journey and as an overall aggregate. Now, what I like to do is I like to look at it from a month-to-month basis. I like to base my progress on a month-to-month basis because a day-to-day is too much stress. It puts us, oh my God, okay. It puts us in an environment where if we make one mistake, we're stuck chasing it the following day. And if we cannot live up to the 2% a day expectations, all of a sudden it becomes very stressful when looking for setups. You start to force ideas, you start to see things that are not there, you start to play tricks on yourself. And it's very important that you do not do this because that's how we death spiral. That's how we ruin 3 months of consistent compounding in 1 to 2 or maybe even 3 days. So it's very important you understand this when you're setting an invalidation, when you're looking to take a trade, that the risk to reward makes sense. In this case, on a typical day, if I get my pivot plus 200 EMA trigger, and as you guys can see, there's a reason why I don't take the trade. I wait and I wait and I wait till I see the signs I need to see and the recoveries I need to see, because then, only then, do I have a reason or means for assuming that my trade could work out, right? So again, instead of just taking a trade just because it's at a level you like, even though you're not seeing what you want, you pose the risk of stopping yourself out on an idea that could have otherwise just been weighted and triggered appropriately, right? So in this case, when I look for my reclaim, I'm always targeting R1, R2, R3. Now, why do I target 3 different things on such a short price gap? Is because although trades can work out, and this is where I'm going to bring up the people that like to, after a price moves 1% or 2%, they love to move their stop to break even, which again, in my opinion, could be considered bad practice. It's extremely essential, right, that you do not set yourself these expectations where, well, I'm in the trade, so price has to hit here for me to exit. This is a big mistake I see a lot of traders do. They do not allow themselves to manage as it goes along in a position that favors them, right? The last thing you want to do is give back money to a market after an idea has already done what you needed to do. The problem is it's very, very black and white for a lot of people where they get their setup, but because it's only 0.7% gain here, and because it's only 1.6% gain here, then it doesn't seem worth their while. Well, this is a bad practice. This is not teaching you anything. At the same time, there are many cases and many instances, right, where price will do what I need it to do. It'll target my R1 level, it'll target my R2 level, it'll miss just shy of my R3 level, and then it'll come back and stop me up. Or it might even hit back to my entry. Now, does it make sense for me to have spotted such a good move, an idea, and to let it all get pissed away because it missed by 0.3%? Naturally, how do you manage a trade, and how do you know that it might not reach this final target? The truth is you can't tell. So what do you do? How do you safeguard this? How do you allow yourself to get paid even if an idea doesn't reach its full expectation without giving it all the way back to entry? There are a number, oh my God, man. In the middle of my session, we were experiencing some crazy volatility on the New York Open. So sorry if I get distracted here. How do you know, right? If price is going to top out, hit all your targets, how do you predict that? The truth is that you can't. So what can you do to safeguard this measure? Once price starts moving away, right? Let's say you get your trigger, you get everything you need. When starts, you get everything you need. You're in the setup, you're long for whatever reason. This gives you your trigger. Price starts to move away. What I like to do, and this is, take profits are going to be different for everybody, but I already like to establish what I'm willing to walk away with the whole ride through. So realistically, let's say my setup would be on the pivot 200 EMA. I'm looking at a stop of about 0.4%. Realistically, what I like to do is I like to exit on 33% splits, right? So 3 positions to close it out fully. And what I like to do is my R1, instead of moving my stop up to break even right away and letting, the market play with my house money, what I like to do is, price tagged into my R1. That's great. I'm closing out 33% of the position. Not only are you securing profits, not only are you covering the cost of fees for executing the trade, you've officially given yourself a means of an exit, right? And some of the hardest things I see people, deal with is they have no idea or at least no discipline when it comes to exiting trades that work out in their favor. They start to play games with themselves. If they have no exit strategy, what they end up doing is, well, I don't want to pull out now because it can go higher. And if it goes higher, why would I close it? Well, now you've lost control of the trade. Although it's in your favor, you have no means of how you're planning to exit. So then again, if price were to fucking completely capitulate and turn against you, you're going to be stuck there frozen in time. And what happens is, instead of a good trade that you can add to your books, more data that you can add to your books, not to mention profit, you're walking away feeling as useless as you did just before you took the trade. You have no data to go off of. You have no profits to walk away with. And you paid fees, and you paid taker and maker fees because you stopped yourself out break even. So that's a big problem. It's a big problem I see a lot in this group. Instead of allowing themselves to progressively take out profit from an overall idea because they're greedy on the whole 3% thing, instead of walking away with around 2% overall, they end up pretty much gambling their entire position, even though it's done exactly what they need them to do. So what do I do in this situation? What's super, super important to me? It's to pay myself as I go along, because there's no telling when a bad headline could come out. There's no telling when a seller can show up with tons of volume that ruins a position. And that happens. That's trading. That's part of it. But how do I protect myself at all costs? I need to pay myself. How do I pay myself? I need to have an exit strategy. What's my exit strategy? Every single goddamn day, it's the same thing. R1, R2, R3 if I'm lucky. Right? I'm walking away with winnings. Although they're not the biggest ones, I walk away with winnings. It allows my stack to grow. It allows me more influence for the next trade. So this is my strategy. This is what I do. When I'm entered in a trade, I have 3 targets in mind. It's simultaneous. It's without thinking. I don't have any time to contemplate what if it goes up, what if it does that. We have other strategies for this. We have other portfolios with other expectations for this. From an intraday scalping perspective, it is about walking away with winnings, especially after a market does what you wanted it to do. The last thing you want to do is over gamble on an idea, or else that not only does that remove the original risk that you're comfortable walking away with, you're also not willing to secure anything. And that's a problem. That's more of a gambler's perspective, right? So right off the bat, 33%. I lock it in. It's a small portion of the trade. It's profit nonetheless. And then what do I do after this? Well, the trade has already entered one of my targets and take profits. So now naturally, price coming back to its entry, I don't like that. I'm not a fan of that because then again, if this R1 level is equal to my amount of risk, then something needs to go here. And what usually goes after my R1 level is my invalidation now becomes my entry. So at the very least, if I do get stopped out, break even, quote unquote, I've walked away with a significant amount of winnings, right? And it's again, it's not going to be much when you're intraday scalping, but I've walked away with something. And that not only does something for my confidence, not only does stuff for my journal, but it also adds data and allows me to gain more context there every time I take a trade like this. Now, there are events where once the stop is moved to break even, once R1 is taken, yeah, sometimes you'll get stopped out. Sometimes it'll get stopped out. But you want to know what's different from watching a trade move up 1 to 2% and having a comeback break even to watching a trade move to 2% and then getting stopped out break even is that I paid myself. I paid myself. I allow myself to reposition myself if it's necessary, right? Now, don't get me wrong. There's going to be days where 33% hits. You take out, you walk away, you move your stop to break even. There's also going to be days where the R2 hits. And right now you're really happy, right? Because 66% of the position is already closed. Your risk is eliminated off the table and you've walked away with 2 out of 3 take profits. In the event that it comes back to break even, well, you've walked out with 66% of the trade already. 66% of the move has been capitalized on. That last 33%, God forbid if it hits or if it doesn't, at the very least, your risk is off the table. So that's very, very important that you guys understand. Not only is it building you discipline, not only is it telling you how to exit, it becomes systemic to you. It doesn't become a foreign feeling to take profit. That way, when price does go back down, you're not going, you see, I was right this whole time. I should have just closed it out. And you're not going, you see, price went higher. I should have kept it. There's no room to start fucking doing this. It's a system. It's disciplined. It is what it is. Nothing else matters except for what you're targeting, except for what you're looking to extract from the market. This is the only thing that should matter to you when you're following a system and strategy. That it's doing what you need it to do, not what you think you want it to do, not what your wildest and greatest expectations want you to do. Because once we start to extrapolate, we lose control. And what good is a trader if they have no control? It's essentially, you guys understand that the psychology behind what makes a trader good and what makes a trader bad is that they're willing to stick to what they said they were going to do. Now, in a perfect world, you enter your setup, you hit R1, your stops move break even, it hits R2, you exit with 66%. And then in the best case scenario, which is not as often, but it does happen, R3 hits 99% or 100%, you close out the position fully. Not only do you have more trade data to add to your journal, you also have a win. Your confidence starts to grow. You start to think, hey, what I'm doing is working. And at the same time, you walk away with profits. Your stack becomes bigger. The next trade, next time around, has more impact, more influence, more size to add, assuming you're sticking to the same risk and setup and size that you would typically use on a trade like this. So right then and there, when it comes to exit strategies, you need to have a plan like this, especially if you're looking at it from an up-down, trendless, uptrend, downtrend. If your whole goal is to trade the intraday, it's very, very important you have these strict set of rules, and it's essential. Really, it's essential. It's non-negotiable. So I hope before I move on with the potential understanding of invalidations and stop losses, I just want to be absolutely clear to everybody. Just understood what I said here. Right? And your strategy will apply to you in its own unique way. But what is important here is that I told you the fundamentals here is that when I enter a trade, I have 3 targets I'm looking for every single time. And I don't play with those. It's systemic to me. I don't have time to debate with myself about whether price can go higher here because there are many days in my data that showed me every time I did do that, it bit me in the ass. And more consistently, more often than not, it does that a lot. More often than not, what I think isn't exactly what happens. Instead, what I do is I stick to the data. And the data tells me that, yeah, you might not get your R3, you might not even get your R2, but you know, at the very least, when your trade does move in the direction you want it to, there's no time to assume whether this will hit or this will hit. It's just about extracting profits once a move has worked in your favor. Cool. So I'm glad everybody understood. I'm getting some questions about the pivot indicator and all this stuff, and that's fine with me. I just want to cover more on the invalidation side and what to do when a trade does not work out in your favor, et cetera, et cetera. And then we'll use this last 20 minutes or so, 15 to 20 minutes or so to have a Q&A, discuss anything that may have been unclear to you guys, all the way down to indicators, et cetera, et cetera. Is that cool with you guys? Awesome. So we discussed the best case scenarios. Now what do we do in the worst case scenarios? This is going to be very straightforward as well. So let's stick with the same setup that we talk about in hypothetical, right? Let's say, for example, my stop is this 608, 250 level. And let's assume this didn't happen while we were talking. Let's just assume, right? You get your setup, yada, yada, yada. You're targeting R1, R2, R3, 0.5% risk for 2.53% gain, right? Your risk to reward makes sense. Your setup makes sense. Your trigger makes sense. Everything following the rules that you set out for yourself. You have every reason to take the trade, so you take it. Now what happens? Oh, something came out, or oh, numbers missed, or oh, for whatever reason, some big player decides, hey, I need to get out of this market right here, right now. Hits your stops, goes right back up. In this situation, you've put up a decent amount of risk for what you thought would be a great idea, all right? Now, naturally, you're probably going to feel a little bit down in the dumps. You're probably going to feel a little bit pissed. But one thing I will tell you is that a lot of these people will do this, right? They'll get stopped out of their trade. They'll watch it go back up. And all of a sudden, now they're telling themselves, you see, I should have just held. I shouldn't have triggered my stop. You see, look, now it's going to go up without me. Yada, yada, yada. Playing victim, whatever the fuck it is. A lot of everybody does this. I'm a victim of this too. Sometimes you can't help but feel like the market's against you. What's important is that you do not let these thoughts marinate in your mind. It is trading. It's systemic. You're going to win. You're going to lose. Nobody's perfect. Nobody's perfect. What's important and what's understood here is that the money, before you entered this trade, your loss and invalidation was something that sat well with you. Okay? If you are not comfortable with your stop, if you are not comfortable with the associated risk, something on your end is wrong. Either you are playing with too much money, you are not actually comfortable with the idea and setup itself, and for that reason, you feel as if this stop was out to get you personally. The market is never personal. It's never hunting you. It's never hunting a specific person unless you are in the millions and millions and millions of dollars. Sometimes shit happens. And guess what? That's why a stop is there in the first place. Because there's no way to gauge beyond this level. The idea is, and the understanding is, if I took this pivot plus 200 EMA trade, is because naturally my idea should be right if these lows are defended. But if it's wrong and these lows are taken out, then I have no business staying in this trade because naturally my read today was wrong. Something about my execution today and trigger did not align with the market's expectations. And that's nothing personal. It has nothing to do with the fact that you took that trade today at that exact moment. Sometimes markets are inconsistent, they're irrational, and they do things we cannot predict. That's what it is to risk. So first and foremost, you need to be completely okay with the loss. You need to be completely okay with the loss that you're willing to accept. Second of all, you cannot take it personally. You cannot take it as if the market's out to get you. And you can definitely not look at the chart after the fact, trying your best to summarize or rationalize why it did what it did. It simply did what it did, and you're in no business of sticking around in the event that this low gets taken out. The last thing you want to do is sit in a position that is already completely against you. Now you've lost control. You've lost total control. Now your loss is much bigger. You're not comfortable with it. We're all human beings. All of a sudden, instead of your $40 to $50 loss, all of a sudden we're at 100, 200. Two perfectly executed trades or three potential perfectly executed trades are now all standing on one idea. One idea, you're willing to risk 3 times the amount of risk for one measly idea. This is bad practice. And yeah, of course, there might be days where you hold past your stop and then it skyrockets up like this. More often than not, this is not the case. But our mind loves to play tricks on us. We love to remember only the times that we got stopped out to the pico dollar to watch prices rip exactly in the direction you wanted it. We are so good at convincing ourselves that it only happens to us and only when we decide to make our decision. We are so good at convincing ourselves of that because a market loves to make a person feel like a victim when they're losing. Okay? So what I want to teach you here is that what is important, much like how you pay yourself, right, along the way. And yeah, sometimes it goes way beyond, and you're like, oh, you see, I should have held. You see, the market's always against me, yada, yada, yada. Every time I finally follow my rules, it finally does this. If you start playing these games with yourself, you're eventually going to make a catastrophic mistake. You're going to set yourself back months and months and months of progress of doing things right, consistently, and always the same way. It is essential that you do not play these games with yourself. Okay? It's absolutely essential. If you get stopped out, you get stopped out. On to the next one. Shrug it off, clear it off your shoulders, move on to the next idea. It's nothing personal. It's not about what you want. This is an intraday outlook. Okay? There are events where you get stopped out here, right? And the market continues to pour down. I'm telling you right now, you will be breathing a sigh of relief that you did not allow your emotions to get the better of you, and you did not allow your own stubbornness to get the better of you. There's going to be so many times where you get stopped out. And yes, of course, guys, there's going to be times where it just wicks down in here and it's right back up within the next 10 minutes. What I'm trying to say is you would have probably panicked down here. You would have probably sold at a much bigger loss. And then you would have still proceeded to say, wow, the market's against me. Holy shit, my luck sucks. Everything except the fact that you didn't follow the rules. And that's super, super, super toxic to your mentality, your psyche. And trading is everything about having confidence. It's about trusting your ideas. And it's about sticking to something that you know will work over a series of 10, 20, 30 trades, not just by a trade to trade basis. You start taking things personal like this, you're going to start personally trading the market as if it owes you something. And you need to avoid this at all costs. It's one thing to take a 0.5% loss. It's another thing to mentally gymnastic yourself into trading way beyond your risk. This is the worst thing you could possibly do, especially when you're in the business of compounding, right? So taking a loss, it's just another day. I can't take it personally. On to the next one. The risk needs to be determined, okay? Does everybody understand this? Does everybody understand what I just went over here? I probably described a lot of you because I'm one of those people back in the day. I had to learn the hard way. I had to stop thinking things so fucking personally, and I just had to assume it was just another day. Some days you win, some days you lose. But what's important is that over a series of trades, my strategy tells me I will come out of this profitable. So let's hope that's well understood before we move on. And again, guys, tomorrow, or I'm sorry, Thursday, we'll go more into the specifics, exactly how to determine a stop loss, at least based on my strategy, exactly how to determine an entry. Right now, we're just going over the basic fundamentals of understanding the common psychological traps that people get stuck in when they're trying to follow a series of rules. No chatter, so I'm going to assume this was well understood. Correct? I'm not just pushing the envelope here. Beautiful, beautiful. Okay, so I've covered the basic essentials of having a system of rules that I personally follow, having a risk associated with the idea that I personally follow, and profit-taking strategy that I personally follow. Now, again, this is one class. It's one class. I needed to break down the core fundamentals of it, the true understanding of why traders do what they do and why they're comfortable with losses, why they're comfortable walking away with trailing stops and wins despite them being small. Profit is profit, and that's all that matters. Okay. I've covered a pretty much basic understanding of this for today's class. We've just been going on for just under an hour now. It's about 52 minutes. I think now we could start opening up some questions, maybe some things that you would want me to go more into specific on the things that we just covered, maybe some indicators, some strategies. I'm pretty well familiar with a number of things here. So again, there's no better time to ask me. There's no in my opinion, I've been in this group for well over 4 years now. I've been here the longest. I've seen many of our traders and how they trade, and I I have a good understanding of what they do and how they execute and why they operate. So now would be the time. For the pivot settings, it's very, very straightforward. I'll leave it on the screen here while people chat away and type away. This is going to be every Monday and Thursday, Degen. We'll do 9 a.m. And if I'm not mistaken, the other one is at 8:30. Oh my God, why did I commit to that? Let me check. Yeah, Thursday class is at 8 a.m. And of course, guys, I understand not everybody has the same time zones. Not everybody's going to be able to make it to every class. Some people have real jobs, real lives. They will be recorded, right? So this is going to be essential learning material for you guys. I'm also, I'm adding another stream with Tariq, so that's going to be interesting. I'm going to be doing 5-6 streams a week moving forward. So you guys are going to be hearing a lot of me. You'll be seeing the scalping side of me. You'll be seeing the hunting setup side of me, and you're also going to see the educational side of me, which is where I think my best suit is. I don't like to use the pivots on the 1 day. The 1 day is more of a supply demand strategy, which I think we'll cover in another series. The FSVZO is nothing more than a fancy RSI, prints divergences and allows you to understand where sellers might be oversold and where buyers might be overbought. It's no different than an RSI. This is like 1-2 buckle my shoe textbook indicator. The only thing is it's got a bit more discrepancies. It's got some volume indexes, its own little moving averages, and it prints divergences, reversal patterns, and hidden divergences. It's proprietary. It's not something that I believe is available to the public. If I remember correctly, I got it from In Silico. So again, it's my own little proprietary blend. How to get the pivot points indicator? It's fairly straightforward. You go over here, pivot points standard. That's what you have to write. And again, I set it to a Fibonacci. So these numbers you see over here, I trade essentially a Fibonacci system with a 200 EMA. Again, it's about keeping things simple. It's not about having all these fucking weird things on your screen telling you, oh, look, Bollinger Bands, blah, 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 blah. It's not about this. It's not about this because everybody's seeing more or less the same shit. It's about what resonates with them so they can actually execute an idea. Everybody tends to ignore the execution and rule following and just looks for that winning formula. There is no winning formula, guys. It's about compounding data and your wins, not only to make more impact on the trades, because the last thing you want to do is risk huge for a trade that can go more or less either way. It's about really following your rules. It doesn't matter what strategy you apply. You could apply 20 different strategies. If you're not going to follow your rules and you're just going to let the market take you wherever the fuck it wants it to go, well then it's designed to do that. So why do you think most people are losers in this market? Is because they don't follow anything consistent. They argue with their brain. And that's not essential. That's not a profitable strategy. You will make mistakes. Yeah, you might be right. You might be right catching a really strong trend and just going, I feel like it's going to move here. Yeah, it might. It might. But let's try this over 9 to 12 months and tell me how much it's bitten you in the ass. It's very, very, very likely that will happen. All luck runs out eventually. All hot streaks come to an end. All cold streaks come to an end. What do you do in between it all? You keep it as consistent as possible. It's the only way you're gonna make any impact in this market. So keep that in mind. And as we could see, our New York Open is not being friendly to us. The market does not like uncertainties. Let's go take a look at the legacy market just so I can get a better understanding here because I've been teaching and that's not really that big of a deal. Again, just inconsistent. Market's uncertain. And as you guys can see by now, as this whole course went on, there's a reason why I didn't just go, oh, we're above the pivot plus 200 EMA. Let's long it. I need to see more. I need to see more. I need to see a low be established. You see, like this is why I don't like using this over here. I need to see a bit more. This is more of a deeper drop that if we are to come back and reclaim and trade like this, well, now I have a real invalidation. Now I have a real trigger and now I have real targets. This is how the trade would look if I were to execute on a day like today. This is how it would look. Does that make sense to everybody, what I just showed them? And I'll tell you what. Let's say market does this. It starts rejecting the 200 EMA, right? Now, naturally, I know a lot of people that would be looking for short setups here. The problem is when it comes to Bitcoin, I'm dealing with something that is finite in supply against something that is infinite in demand, infinite in terms of demand in that sense, right? I'm sorry, finite in demand. No, I'm sorry, finite in supply versus infinite in supply. So naturally, the short selling on the BTC side of things, fundamentally poses more risk than something with billions and billions and billions of tokens and tokenomics. So on an event like this, when I do see my pivot plus 200 EMA reject, I don't like to add risk to that idea. Instead, what I like to do is target my actual mean reversion play, because a market, especially BTC, is more likely to bounce after it's been sold for a certain amount of time. And that's what I usually target, right? So there are events, right, where I don't get what I'm looking for. Guess what? Does that mean I take a trade? Absolutely not. Right? Oh, the market's not doing what I want? Okay, that's fine, because you want to know why? I'm not exposed to this market. I'm not exposed to this intraday chart, so naturally means fuck all to me, right? If it wants to trade between pivot and S1 and S2, well, guess what? It doesn't mean anything to me, because first and foremost, if I was long from this idea, well, my stop's over here. So if it wants to go do this, well, guess what? It's just another day for me, and that's a chaos zone, and I don't permit myself to trade the chaos. Instead, what's the next plan? What is the next plan if I get stopped out? Oh, look, S3 level, mean reversion. That's what I'm targeting next. Systemic. Nothing changes. Every single goddamn day, I'll tell you guys the same strategy every single day. You guys can document it in my corner for years now. Nothing changes about how I approach my market when I look at an M15 strategy. And that's the only way I protect myself. It's the only way I don't let myself get too big-headed. It's the only way I don't discourage myself into oblivion. I just treat the market as it is. It's either doing what I need it to do, or I don't do anything at all. And that's something most people in here need to learn. I understand. Don't get me wrong. I put myself in the shoes of a member that understands, man, I got 1 month, I'm paying this much. I understand, but forcing things doesn't do you any favors. You're here to learn, you're here to apply, and you're most importantly here to make some money. Now, you can't make money if you're constantly risking it all the time in areas that don't permit you to do so, okay? So if you can't make money on a day, the last thing you want to do is lose it and set yourself back. Not only does this dig a hole deeper for yourself, you're also fucking putting yourself under serious amounts of pressure, and risking is a luxury. You cannot risk under pressure. It's going to lead to mistakes. Please understand these core fundamentals of trading. It's an absolute necessity. You need the right mindset to be able to do this day in, day out without losing your mind. Okay? So in this event, as you guys can see, nothing of here tells me much. I have a low that's being swept. Our oscillator is getting low. So I want to assume that if we do trade back above the pivot plus 200 EMA, that this is going to be my invalidation, meaning I shouldn't see price come back here after we just sold off into an oversold territory. And I'll assume that if we do reclaim what I consider to be the bias / mean reversion of the day, not the mean reversion, the bias / mean of the day, that these targets are most likely going to get ran. And if they don't get ran, well, at the very least, I'm expecting this to get ran, and I'm willing to put the appropriate risk to at least target this, because I have a reason to believe that these three will be targeted. If they cannot push after New York Open, after all the momentum in the world, if it starts to even out here and reclaims a very, very important level for me, well, then guess what? We have a trigger. And that's super, super, super important to understand. Did I make myself clear on this? Was there anything inconsistent about what I just said? Do you guys understand? Beautiful. I'm going to take the fact that nobody's saying anything, that this was understood. Beautiful, beautiful. You guys have been an excellent audience, by the way. I want to do a Q&A now, or I just want to do a free-for-all. I think we got about 20 more minutes. I want to say that, I think I've stoned you guys enough with the lecturing and monologues. So if you just want to shoot the shit with me for the next 10, 15 minutes, we could do that. Anything that you want to ask, anything at all, now would be the time. And I don't care if it's, hey, with respect to the topics at hand, of course, for other people listening, I don't think they want to hear us talk about sports and stuff like that. So please, be mindful of that. A lot of people took the time out of their day to to join this class. And I want to say I appreciate every single one of you guys for taking the initiative and effort to learn instead of just following trades. It's the ones that join these streams or the ones that actually watch these ones that actually have a future with us. Please understand that. Yeah, my 200 QEMA is a quadruple exponential moving average. It's slightly altered and tuned to fit crypto market and narratives. Do I stick with just BDC with the strategy? No, I stick with it on anything. But what I need is volume, right? So this is something we'll cover later on when we start diving in more into the derivative sides of things, right? Because with the strategy I just gave you guys, or at least what I do, this could be applied with spot as well. But when it does come to trading under pairings, we need respective liquidity and respected volume, or at least some sort of indication that volume or capital is being actively traded in large numbers, or else we just get stuck in ideas that do not have any follow through, and then we're essentially trading against ourselves. So there are conditions. What I like to trade, my three most frequently common traded things are Ethereum, Bitcoin, and Solana at this point in my life. Right? They've proven themselves to be the most liquid out of the millions of cryptos that do exist today. But that doesn't mean that other pairings will not have their narratives, will not have their rotations in sudden capital. This can be applied to every single market that is available to you. However, you need to understand that it more reliably works on a pairing like Bitcoin, like Ethereum, like a Solana, because they are much more liquid. So these areas are much more actively traded, even if there's nobody really trading them. So they provide more of a reliability. When it comes to illiquid pairings, if there's nobody on the books, you are trading against yourself. You're trading against market makers that are just there to provide liquidity for the price. So any inefficient move will be absolutely slammed down, and you'll find yourself round tripping a lot. It's what I see a lot in this group. They do is we'll take trades on very, very illiquid pairings. They'll move because, hey, a bunch of traders decide to jump into this trade. There's no follow through because there's no volume, and we come back to get stop break even. Right? There are so many strategies to choose from. How did you land on which one suited you? Through trial and error. I've done a number of things: trend lines, small amounts of order flow and mechanical trading. I didn't find they were for me. I couldn't find anything consistent with it. But what I did find very consistent was Fibonacci's and order blocks on higher time frames, right? So I've been doing this for 8 years now. My first 3 years were a very, very big struggle. I struggled a lot with finding profitability in those first 3 years. I was constantly flip-flopping between ideas and never keeping anything consistent. And I do believe that's part of the learning process, right? Like you need to find what works for you, what makes most sense to you, what seems most comfortable for you, and what appeals to the eye in the easiest way to you, right? So naturally I found something that works very, very simple, and I have a series of triggers after years and years of back testing and data compounding my data to the point where it provides me a day in, day out strategy. Again, I don't expect you guys to figure this out in 1 to 2 months. The same way I don't expect a doctor to become a fucking certified surgeon after 3 months of education, right? It's years and years of practice. Now that's probably not what people like to hear, but the more dedicated you are to something, the more progress you're going to see. So what I could say in regards to that question is find something that resonates with you. We have a ton of traders in here, ton of traders that trade different things. I'm seeing POCs as the new buzzword when really it's Fibonacci's. So what I think makes a lot of sense to people mostly is the mathematical code of the universe, which is a Fibonacci level. I think it's the easiest one. I think it's the one that a lot of people will look at regardless of what they understand. Regardless if they understand that that's what they're looking at, it's what they're looking at is just Fibonacci levels on a day-to-day basis. So keep it simple. That's one thing I'll say. Don't think that because this guy has fancy indicators all over his place and it's unreadable and there's trend lines everywhere that this person understands more than you. If anything, they don't understand anything at all. Do I just stick with BDC with the strategy? No, I answered that. Are there certain events that you stop trading? Example, Pocket doesn't trade on days with war news. Do you do similar? In many ways, yes. If I believe the market, and you'll see this a lot in the legacies. If a market doesn't like uncertainty or things that doesn't resonate well with where the general direction of the market is going, then yeah, if you feel like something is unrecognizable, it's at your own discretion, right? There are some people that love to trade volatility like that. I'm not one of them. I like to see consistent things. I like to know that market is just business as usual and there's nothing interfering with what I'm seeing. So it's at your own discretion. And there in some cases when I sense severe irrationality, for example, like the COVID crash or the Israel-Iran tensions, then yeah, if I feel like today is an off-hedge day, then yeah, it is. But most likely, I'll see signs on the intraday side of things that give me such a reason to believe that. Do I have a strategy for swing trades, or do you only trade intraday and spot? I have absolutely a strategy on swing trades. Absolutely, either 200 EMA flips or big pockets of demand or inefficiencies. Right. For example, a couple of I think yesterday I provided a setup that is most commonly seen back in like my 2020 days where we usually had a lot of price discovery markets, and a lot of these blocks, these order blocks, love to get tapped into after a full retrace. Usually you snag the top of this box, you average in down into this 9% area, and you look to exit a bit higher. In this case, it's already reached a high of 10%. So naturally, you could see how well that works. But that's something we'll cover at another later time. I think most people just wanted to see the fundamental understanding of how trades are taken, why they're taken, a series of rules and executions surrounding it. Other than that, we'll cover swing trades and longer term ideas in another stream for sure. I would like to know the indicators you use in the setup and how you would read them. I have an idea of what you use. However, I've never used Fibbo. Again, I kind of covered this in our whole extensive course here today. Pretty much like how I determine my take profits, how I determine my stop loss, what I consider to be no trade zones or unreliable, and where I consider the reaction to be most, with the most strength on days that do not fit my bias. So again, I have this recorded. So you could just go back and watch that whole thing. I don't want to go over it again because then I'm repeating myself. When you trade altcoins, do you pay attention to what BTC is doing at the moment? Yes and no. Sometimes narratives don't need Bitcoin's permission to start going up. I think we've seen this throughout the past 6-7 months, where we'll see memes that have no correlation whatsoever to BTC just pop off and do its own thing. A lot of the times, it's really due to volume. And if there's excitement, if there's a narrative, if there's something to suggest that traders are at the table, then I don't think BTC needs to be taken into effect or into account. Now, I do like to consider a lot the metrics on that side of things in terms of Bitcoin dominance, USDT dominance, ETH BTC, Sol, Ethereum. I like to consider these things when I'm looking for a strong alt play, absolutely. But these are things that require just a bit more context, not so easy to explain over the next 5 minutes. How and what do you journal regarding trades? Okay, so I use a journal through a software. It's called Edgewonk. Edgewonk, so EDGEWONK. And this is a trade journal that allows me to put my missed trades. It allows me to highlight what setup I'm taking. Allows me to determine the risk reward, the time it was entered, the reason for taking it. It also allows me to put in my missed trades, setups that would have otherwise worked out. And not only that, because this is just basic stuff, I can't stand when people put stuff in an Excel sheet, because you have APIs and all this stuff to help you simulate and predict and quantify future outcomes. So my journal, what it does is, after a series of trades, it could start to simulate its expected growth. It can also start to simulate where the drop-off point is, so whether my edge is developing or diminishing. Like, these things are essential. They're essential. Yeah, they might be tough to use in the beginning. They might be redundant and annoying to always have to put in your stuff, but they are absolutely useful tools. An Excel sheet won't cut it. I respect that people are taking track of their trades, but if you're not doing anything with that data, if you can't see it on a chart, how it's growing, how it's dropping off, whether your missed trades are actually end up providing you an edge or not, this is all stuff you need to use. You're in the trade markets, my friends. You guys, there is no limit to the amount of experience and expertise that could be entering the space trading against you. It's not little leagues where you're protected from going against the absolute superstars of the market. You need everything that you have at your disposal. Do I pay $300 a month for the FSVZ out? No, I was pretty, I was in a group with InSilico once upon a time. I was in a very, very big elite alpha Discord group back in my 2018 to 2020 days. I had the privilege and luxury of learning from some players that have more money than I could ever imagine. So I learned a lot from them. I got a lot of help from them, and that's pretty much how I managed to get this fucking indicator. So yeah. How often are the pivot lines recalculated? Does it move based on the time frame selected? For example, every 4 hours. These pivot levels were reset at the end of every daily close. And what helps you is you can also go back a number of pivots. So I'll go back a number of 4 days, and I'll get to see all my pivotal levels on an intraday level. So you guys see that? Every single day I open up the chart, every daily close, my levels are different. The bias wiped clean. And I look at how do I extract from the market today. Not what it was telling me yesterday, but today. That's how you keep something consistent. Yeah, and there will be slight discrepancies between a common 200 EMA and a 200 QE EMA. Again, they are very, very, very minimal. It's more for precise traders that need every dollar they can as a discount in order to get filled on larger positions. So again, if you're trading smaller size, it's not going to matter too much. When I say bigger size, like we're talking in the 8, potential 9-figure positions here. So it shouldn't matter too much to you guys. Oh, we have more questions here. Okay. Stu said it right, Kike. It's edge wonk. Yeah, that's it. That's it. Give it a look. Give it a look, guys. Sometimes you need essential tools to help you get better at something. Sometimes it might require a tiny bit of an investment. I have no affiliation with EdgeWonk. I've been using it for years. I have no partnership, no ref link, no nothing. I just love their tool. It's helped me a lot, and again, helps me simulate data. So play around with it. Take your trading journey more seriously. A lot of you guys come in with entitlement and expectations that are way beyond your skill level, and it's just important to have realistic expectations regarding it. Okay, dude, this was an intense session. I am sweating from my armpits, and it's like -3 outside. But I think we have 15 minutes here left that I have scheduled, but I think we covered a really large amount of stuff today. Anything else I want to add? I mean, oh, wait a minute. It's 169 per year now? That's interesting. I had to pay a one-time fee back in the day. I don't understand that. That's interesting. And no, it's not that expensive at all. It's just the cost of operations for a trader. It's the same way I pay TradingView $900 a year to get like all my alerts, everything that I need. I didn't know. I did not know it costs a yearly subscription anymore. That's interesting. I paid a one-time fee, I guess, when it first came out. But it's an advanced journal, right? So if that journal seems a bit too advanced for you and you're not going to make the most out of it, something as simple as writing it down on Excel and just keeping track of your data is essential and important. If you're not doing that at the very least, you're not a serious person. And I mean that sincerely. I want to see the best for people, but if you're not taking notes and you're not taking this, it's like coming to school without a book, without a notebook. Like it's ridiculous. It's ridiculous. Not even school. It's like going to university without a notebook or a laptop. Like what the fuck, This session, I started recording it. I see Cypress is in here, so maybe you got a good chunk of it. But I started recording a good 5 minutes after I realized he wasn't in here at the start. So we'll see which one has more. Excuse me, which one has more recorded. I should apply to become an affiliate. Oh, look at that! I'm like a #1 shill for these guys. But yeah, guys, I think that concludes our first session. I want to say that we covered a lot. If you guys, did find this helpful and useful, obviously your comments mean the world to me. And if there's any shouts, I'd greatly appreciate that. It allows me to continue doing what I'm doing. But yeah, let's plan ahead for the next session. Next session, we're gonna go more into the extensive side of things. We're gonna go more into finding a setup in real time all the way down to the decimal in terms of risk, how it would position with an arbitrary number like $1,000, and how I would mitigate the risk so that it fits my stop loss and invalidation. Okay, so next class is going to be less about the basic understanding, less about the basic core fundamentals of trading, and more into the technical, numerical side of things. With that being said, I was not expecting a 90 plus person turnout for this. I really thought I was getting around 30, 40 viewers. So again, I really do greatly appreciate this turnout. You guys have been awesome. And if you do like my streams, we have a few more throughout the week. We have Thursday for our next class. Wednesday is going to be our macro with DB, which is an extremely important week, guys. You do not want to miss that. That's the day after the elections. Most likely, they will still be counting. We got FOMC on Thursday, so it's going to be huge, guys. You don't want to miss that one, right? And then, of course, we got the streams of Pocky, and we all have a lot of fun there. That's where we're a lot more laid back. We shoot the shit. We look for setups in real time. And maybe I might press the short button one day. But with that being said, without anything else to say, I want to thank you guys so much for joining. I want you guys to have a good trade week, and hopefully you guys learned something. And if there's anything at all that you guys maybe find a bit more difficult to understand, maybe you're a bit shy, send me a message, mention me in the chat. We're here to help you, so help us help you. All right, guys. Take care. Have yourselves a great morning or a great afternoon, wherever you are, and I'll see you Wednesday or even tomorrow, maybe. Take care, guys.